Hi, this is Kerry Artek with Wicked Stocks bringing you your daily Tesla report for Thursday, May 30th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the big picture. We'll work our way into the day itself, of course. Just a reminder, and we're not going to see this level anytime soon, but if over the coming weeks we test 220.18, a one-year descending channel top, it may well contain buying through the third quarter and into later year. Below 220.18, you could say that the one-year trend remains bearish in this lower low, lower high dynamic that is defined in part by the 220.18 channel top. And I think that that's really all that needs to be said. I will then really just sort of jump to I'm going to jump to the near term. I'm looking for the right chart, actually. And this is it right here, 183.85. I've reduced this to a session containment level. Just the passage of time. We've got really kind of 4 consecutive range-bound days following that sell signal last week. 183.85, still able to contain daily buying pressures. And yes, still the market can fall to 158 even over the next week or two, but this is turning into more of a 2 to 3 week stretch. And the way I really want to structure this, kind of the near term, is really we could be in this sort of two-sided framework with 167.75, the low settlement price that was put out about 3 weeks ago, and of course 183.85 is this former 2-week channel bottom that we settled below almost a week ago. 183.85 able to contain session strength, 167.75 able to contain session weakness, and we have a series of minor points inside that are well suited for aggressive day traders, but really in terms of the trade of the day, it is 183.85 to sell, 167.75 to buy. Now, by a degree, and not a significant degree, and I mentioned that because of the range-bound dynamic that has occurred over the last 4 days, still anticipating the possibility of 158 even based on that sell signal last week below the 183.85 formation. But, truly, it would be a settlement below 167.75 that would clarify 158 even as a likely 3 to 5 day target where we could bottom out on a weekly basis, possibly through June and round back up again. And as I've been saying, because of the longer-term bearish dynamic that exists below 220.18, when you're in a bear trend, you go with the sell signals more aggressively than the buy signals, typically. You can play the buy signals, but if you're given a sell signal opportunity that's pretty textbook, you play it because odds favor that not failing. Odds favor follow through on a sell signal below 158 even. So I'm just mentioning, as I have now a lot over the last week or two, that closing below 158 even is your next meaningful go with sell signal as we move through June and into July. And I do think that if we close below this 158 even formation, that is your indication for a retest of that 101.81 January 23 low. Yes, on the way down, we have this long-term trend line that captured selling pressures 5 or 6 weeks ago at 141.04. And that will be there to capture session containment, maybe weekly containment on the way down. But still, once again, I'm speaking to you kind of 3 to 5 week out to 1 to 2 month traders, that if we close below 158 even, I see no good reason to be long. In fact, I would play the short side all the way back into the very low 100s within several months or sooner of closing below 158 even. Let's talk upside. If we do close today, and I don't see it, but it is certainly possible that if we did close today above the 183.85 formation, we're just 3 to 5 days at the most from reaching this meaningful 193.39 channel top. And that formation spans back to the December 23 high, able to contain buying through the month of January. From here, we can fall away for several weeks. And so that is that. In fact, if you are anxious to sell the market at a higher price, a 193.39 is your place to do so. If your time horizon is 3 to 5 weeks, I don't know about 2 to 3 months out, but you never know. 193.39 still a classic channel top, and is considered a 3 to 5 day target if we close above 183.85. Closing above 193.39, not going to happen today, but if over the coming weeks, over the next couple of weeks, it does happen, then yes, that 219.43, or in other words, on the weekly chart, 220.18 formation becomes a 2 to 3 week objective, where we could top out, as I say, through the third quarter and fall away from here. We would have a significant longer term buy signal if we can close in the next month or two above 220.18, anticipating then the 320s, 330s over the following 3 to 5 months. But we're a long way from that right now. Until then, it is kind of selling upside pullbacks aggressively. That is to say, upward retracements to meaningful resistance levels. In this chart, it's 220.18, selling that aggressively, possibly through the rest of the year, or selling weakness. And right now, in terms of the big picture weakness, in terms of weakness through the month of June, that would come with a settlement below 158 even, which we're not going to see today. But if we were to close today below 167.75, we should see it in a matter of 3 to 5 days. Once again, inversely, closing above 183.85, expect 193.39. If you're still short from about a week ago after having closed below 183.85, I don't have a problem with that, and I think you can stay short up to 183.85, although by that point in time, you may be taking a loss on that short sale. You probably actually are. And so that is one of the reasons why we've reduced this as a significant overhead resistance area. It's actually converging over the next week with 193.39 anyway. So at least for today, for Thursday, 183.85 solid resistance, able to contain daily buying pressures, and if settled above 193.39, likely within 3 to 5 days. I think that pretty much rounds it out. Please click like, share, subscribe, and check out wickedstocks.com. We offer a 5-day free trial on all of our work. I'll be back tomorrow with Friday's Tesla report. You have a great day.